The next bit of work that we are going to do is very important for the understanding of accounting. So the effect of a transaction on the accounting equation. Now, every transaction that occurs in a business changes the business's financial position. The accounting equation looks different after every transaction. So the effect of every transaction consists of two sections. This dual effect on the financial position assures that the accounting equation will balance after every transaction. It is called the dual entry principle and forms the foundation for the double entry principle, on which accountable bookkeeping is based. So before a transaction is entered, it should be analyzed first to determine how it would affect the three elements of the accounting equation. So the following are typical transactions and how it affects the accounting equation. You are required to indicate different transactions' effects on the accounting equation. So pay close attention to these examples that we will be doing now. Number 1, the capital contribution. So the transaction will read, Mr. A.S. decides to start a bicycle business. He draws 250,000 Rand out of his personal bank account and deposits it into a new account that he opened in the name of Menlo Bicycles. So let's analyze two parts. Part 1, the bank, which is an asset, increases with 250,000 because there is more money in the bank account. Part 2, the owner provides capital and receives interest in the business. So in other words, owner's equity increases with 250,000 Rand. So if we go back to the transaction, from the transaction you must be able to identify these two parts. So Mr. A.S. decides to start a bicycle shop. He draws 250,000 out of his personal bank account. Now remember, personal bank account has nothing to do with the business. Only once he deposits the money does it have anything to do with the business. So his personal bank account and drawing the money from there, we don't record right now. He deposits it into a new account. So a new account signifies that a new bank account was opened. So my first account to be used is bank, and he opens it in the name of Menlo Bicycles. So when he deposits it into the new bank account, it means that he contributed capital to the new business. Therefore, the new bank account means that is an asset, whereas the deposits into a capital account, that's owner's equity. So let's look at the accounting equation. So previous position, this is a new business starting. So previously, nothing happened in assets, nothing happened in owner's equity, nothing happens in liabilities. Now the transaction comes in. So the transaction says that I'm increasing my assets with 250,000 because bank now has 250,000 Rand added to it. I also increase my owner's equity with 250,000 because the capital account increased with 250. So my new accounting equation says on the left hand side there's 250,000 Rand added. On the right hand side I have 250,000 plus nothing. So that leaves me with, on the right hand side, only the 250,000. Now I test. Is it in balance? Left and right? Yes, 250 is equal to 250,000 on the other side. Comments. So with the opening of a new business, before any transaction takes place, all the elements would always be naught. The contribution of capital is usually the first transaction of the business, and the owner can at any time decide to contribute more capital. Because assets and owner's equity increases with 250,000, the accounting equation will balance after the transaction has taken place. And lastly, the owner owns all interest in the business because there was no other money borrowed from any other concerns. Now, let you try it on your own. Transaction. Mr. A now opens a business by drawing 500,000 Rand from his personal bank account and deposits it into the account of Menlo Traders. So firstly, he deposits, meaning capital contribution was made, into the account, which means that is the bank account of Menlo Traders. So in other words, before the transaction, my assets, owners' equity and liabilities were nothing. Now he deposits money into a bank account, so he adds the money to my assets. Also, he adds the money to capital, which is known as an owner's equity account. So adding the money to owner's equity, nothing happens in liabilities. So now my new position says my assets are 500,000, my owner's equity plus liabilities are 500,000. Therefore, my accounting equation is in fact in balance. 2.7.2 Obtaining loans. The transaction reads as follows. The business wants to expand, but the owner does not have enough funds. He obtains a loan from ABSA worth 450,000 Rand. This loan is to be repaid over 5 years as one amount. So let's analyze. Part 1. The bank, which is an asset, increases with 450,000 Rand because the amount is transferred to the bank account of the business. Part 2 says we had no debt previously at ABSA, but now we do have a loan worth 450,000 Rand. Therefore, my liabilities have increased with 450,000 Rand. So if we go back and we read the transaction again, let's see if we can do the analysis while reading the transaction. So firstly, we're just looking for the account 1 and account 2. The business wants to expand, but the owner does not have enough funds. He obtains a loan from ABSA Bank with 450,000 Rand. This loan is to be repaid over 5 years as one amount. The repayment is not necessary right now because that would only happen later. What is important now is that we have a loan which is known as a liability of 450,000 Rand. Then you must know that once the loan is obtained, it's paid into my bank, which is an asset account. So therefore, let's go and look at the accounting equation. So my bank previously were on 250,000 Rand. Now I add in a further 450,000 Rand, which means my new position is now on 700,000 Rand. Nothing happened to owner's equity, so owner's equity stays 250,000 Rand. However, my loans, which was on 0, increased with an added 450,000 Rand. So now my liabilities are standing on 450,000 Rand. Now, very important is if I add my owner's equity and my liabilities together, I get 700,000 Rand on the right hand side. Therefore, my assets of 700,000 is equal to my owner's equity plus liabilities of 700,000, which means my accounting equation is still in balance. Comments. A liability occurs when the business receives funds from another concern or from someone other than the owner. The loan has to be repaid within 5 years and is therefore a non-current liability. Note that this transaction is not affecting the owner's equity. Fourth, the accounting equation will balance after this transaction has taken place because assets as well as liabilities increased with the 450,000. Lastly, the owner's interest in the business assets is now 250,000 and ABSA's interest in the business is 450,000. So when the business closes down today and all the business's assets are sold, the owner is entitled to 250,000 and ABSA to 240,000. Now let's try and do it yourself. Mr. A. Else wants to expand his business but does not have the relevant funds. He has already contributed capital of 500,000, so he obtains a further loan from Nedbank with 680,000. So therefore loans, in other words liabilities, increase with 680,000. Now remember, when the liability is paid into our account, it also affects my bank account. Now when we go to our previous position first, previously they said the owner contributed capital of 500,000 Rand. Now remember that 500,000 Rand from the owner were also paid into the business's bank account, so therefore my assets also increased with 500,000. My loans had nothing. Then the transaction happened. Now when the transaction happened, we created a loan of 680,000. Now this loan does not affect my owner's equity, so my owner's equity stays on 500,000. However, these loans, the money were paid into the business's bank account. Therefore, the bank account of the business also increases with 680,000. So now my bank account, with the capital of 500 and the loan of 680, my bank account now stands on 1,180,000 Rand. My liabilities now stands on 680,000 Rand. So now let's test if we are in fact in balance. And we test by going to look at, if I add my owner's equity and my liabilities together, I see that I get a total of 118,000. 1,180,000 Rand. So I test whether my left hand side is equal to my right hand side, and I see the two amounts are in balance. In other words, they are the same, so my accounting equation works out. Third transaction, cash purchases of assets. Now, before we start with this, let's just consider what is our previous position. So equipment has nothing in it, but bank, remember, has 700,000 Rand in it, because 250 came from capital and 450 came from loans. So now the transaction reads, the business purchases a cash register and a counter for the shop and pays by check 13,700. So let's analyze. Firstly, part 1, the bank, which is an asset, decreases with 13,700. We know it decreased because we paid by check. Now a check means that the money goes from my bank account into whomever I buy the goods from, into their bank account. So there's a transfer from the bank to their bank. Part 2 says, what did I pay for? I bought equipment, which is also an asset, and that asset, equipment asset, increased again with 13,700 because the business has added a cash register and a counter for its equipment, If we go back to the transaction, let's read the transaction again. The business purchases a cash register and a counter. Now those two things are known as equipment, so they are classified as an asset. They pay for it by check, so that is my bank account, which is also known as an asset. So therefore, if we go to the accounting equation, firstly my equipment just increased with 13,700. My bank, however, decreased because the money left my bank, 13,700. Nothing happened to owner's equity and nothing happened to liabilities. Therefore, my owner's equity stays on 250 and my liability stays on 450,000. My equipment, however, which was 0, now increased with 13,700. Therefore, my equipment is now on 13,700. My bank account, however, was on 700,000, but I took some money out of the account to pay for the equipment, so now my bank account will stand on 686,300. Now let's test if our accounting equation is in balance. So if I add my equipment and my bank amount together, the two amounts together gives me a total of 700,000. My owner's equity and liabilities together gives me an answer of 700,000. So therefore my right hand side equals to my left hand side, which means that my accounting equation is in balance. Comment. The composition of assets has changed, but assets consist not of bank alone anymore, but of bank and equipment. Therefore, one asset, bank, is exchanged for another, equipment. Because assets increased and decreased with 13,700, the accounting equation will still balance after this transaction. Let's try it by yourself. Transactions. Mr. Else intends to start trading and bought for cash equipment. So first there's work cash, equipment worth 45,000 Rand, merchandise, which is also known as trading stock, worth 80,000, and a vehicle worth 200,000. Now to refer to the previous do-it-yourself to determine how much money is left in the bank by balancing the accounting equation. So the previous position, remember the previous position said that the owner's equity were 500,000 and the liabilities were 680,000. Therefore the amount of money in my bank account were 1.180 million Rand. Nothing in equipment, nothing in trading stock, and nothing in vehicles. With the new transaction though, the account that we've identified is cash, so there's a change in my bank, equipment, so there's a change in my non-current assets, merchandise, so there's a change in my current assets, and vehicles, so there's another change in non-current assets. So therefore my equipment increased with 45,000, my trading inventory increased with 80,000, and my vehicles increased with 200,000. Now all of these, the 45, the 80 and the 200,000, all came from bank. So in other words, my bank also changed, but instead of increasing, I decreased my bank so that the money can be taken from bank. So therefore my bank decreased with 325,000 Rand. Nothing happened to owner's equity and liabilities. So if we consider our new position, owner's equity is still 500,000 and liabilities are still 680,000. My assets composition changed, however. My bank decreased and is now only 855,000 Rand. Equipment is now on 45,000, trading inventory on 80, and vehicles on 200. So let's test if in fact our accounting equation still works out. So if I consider my assets side, if I add all of my assets together, it gives me a total of 1,180,000. If I add up my owner's equity and liabilities side, it gives me 1,180,000. Therefore my left hand side equals to my right hand side, so my accounting equation is in balance. Our next one is incomes. So the transaction says the business repairs a bicycle and receives 125 Rand cash. Let's identify the parts. Firstly, part number 1, the bank, which is an asset, will increase with 125 Rand because the money received is deposited into the bank account. Part 2 says the fee that the company gets for the service is called current income. So this is an income account which increases the profits and thus increases the owner's equity indirectly. So therefore, if we go back to the transaction, we can see that the business repairs a bicycle. So the repairs are known as a service or current income, and receives 125 Rand cash, and the cash points towards using bank. So in my previous position, so from the previous examples, I need to get previous position, is as follows: 13,700 in equipment, 686,300 in bank, 250 in capital, and 450,000 in loan. So with the new transaction, part 1 influences my bank. So therefore, I put money into my bank. So I'm increasing my bank with 125 Rand. This 125 Rand also increases my incomes, which is an owner's equity. So nothing happens to equipment, nothing happens to capital, and nothing happens to loan. Therefore, my equipment stays 13,700, my capital stays 250,000, and my loan stays 450,000. Therefore, increasing my bank to 686,425 and increasing my incomes to 125 Rand. So therefore, if I test if my accounting equation is in balance, I can add up my assets and it gives me 700,125. If I add up owner's equity and liabilities, also gives me 700,125. Therefore, all incomes earned by the company affects the profit positively. In other words, it increases the owner's equity. So the owner is entitled to the profit, and therefore the more the profit, the more the owner's equity. Seeing that the assets and owner's equity both increase with 125 after this transaction, the accounting equation will still be in balance. Our last transaction to consider. Transaction. The business issued a check with 550 Rand for the purchase of stationery. Let's analyze. So analyzing first part 1, the bank, which is an asset, decreases with 550 Rand. I know this because they said that a check was issued. Now a check means that I paid someone money. Part 2, stationery, which is an expense, decreases the profit and thus also decreases the owner's equity indirectly. I know this because in the transaction they said we purchased stationery for 550 Rand. So let's first consider the previous position. Previous position, we had equipment of 13,700, bank 686,425, capital 250, 125 Rand in incomes, and then loans were 450,000. In the new position though, we said that we are decreasing my profits. So I'm decreasing my incomes through my expenses of 550. This 550 comes from my bank account, therefore decreasing my bank account also with 550,000. No change to equipment, no change to capital, and no change to loans. So therefore my equipment stays 13,700, capital stays 250,000, and loan stays 450,000. My bank and profits changed, however. My bank is now on 685,875, whereas my incomes or expenses is now on negative 425. Therefore, if I add up, I will add up my assets, which equals to 699,575. I would do the same for owner's equity and liabilities. Owner's equity, 250 minus the 425 Rand plus the 450,000 equals to 699 Rand 575. Therefore, my accounting equation is once again in balance. So where expenses are paid in cash, the bank, which is an asset, will decrease. Because the profit decreased, the owner is entitled to the profits, so therefore the expenses will always decrease the owner's equity. And lastly, because the assets and owner's equity both decreased with 550 Rand, the accounting equation will balance after this transaction has taken place. Now we're going to try exercise 2.5 to see if you can do this all by yourself.